What's up, everyone? Welcome back to the channel. Today, I'm breaking down the one habit that made me my first $100,000 investing. And the crazy part? It's something any beginner can start doing today. No special skills, no fancy math, no day trading required. If you're new to investing, or you've been struggling to stay consistent, this video could literally change your financial life. Let's get into it. 1. The habit that changed everything. You might think the habit was picking the right stocks, or trying to time the market, or even reading a ton of finance books. Nope. The habit that made me my first 100K was simply this: consistently investing a fixed amount of money on a schedule, no matter what. Also known as dollar cost averaging, or DCA. Sounds simple, right? But simple doesn't mean easy, especially when the market is crashing, when your friends are panic selling, or when it feels like you're missing out on bigger, flashier trends. What this habit did was remove all the guesswork. I wasn't trying to predict anything. My only job was to show up and invest, every week, every month, whatever the schedule was. Over time, this one habit let me buy more when prices were low, buy less when prices were high, stay invested long enough to let compound interest take over. And that is how the first $100 started building, quietly, automatically, in the background. 2. Why this habit works. Let's break it down for beginners. Reason number 1, it removes emotion. Most people struggle because they try to time the market. But timing the market perfectly, that's basically impossible. When you invest on a schedule, your emotions don't get to vote. Reason number 2, compounding starts to actually work. Compounding doesn't feel magical at first. But after a few years of consistent contributions, you'll notice something shocking. You earn more from your returns than your deposits. That's the moment investing clicks. Reason 3, it works with any income. You don't need thousands. Even $25 a week, $100 a month, it adds up faster than you think. Reason 4, it builds discipline. This habit isn't about perfection. It's about showing up. By investing regularly, you're training yourself to think long-term, and long-term thinkers are the ones who build wealth. 3. What I actually invested in. Now let me show you the exact approach I used. When I started, I didn't pick individual stocks. Picking stocks is hard, risky, and honestly, unnecessary for beginners. Instead, I put most of my money into broad, low-cost index funds and ETFs, such as an S&P 500 index fund, a total stock market fund, global stock ETF. Why? Because with one investment, I owned hundreds or even thousands of companies. Instant diversification. Low fee. Long-term growth. I wasn't trying to beat the market. I was trying to be the market. And historically, the US stock market has returned around 7 to 10% per year over the long run. Combine that with consistent contributions, and the first $100 becomes almost unavoidable. It's just a matter of time. For how you can start today. All right, here's the practical step-by-step for beginners. Step 1. Open a brokerage account. Pick a reputable platform in your country. Look for low fees, automatic investing features, and a clean user interface. Step 2. Choose your investments. For most beginners, consider S&P 500 Index Fund or ETF, Total Stock Market ETF, Global Diversified. Simple. Hard to mess up. Step 3. Set up automatic deposit. This is where the magic happens. Automate weekly or monthly contributions. The goal: make investing something that happens to you, not something you have to remember. Step 4. Increase contributions over time. Every time you get a raise, a bonus, a tax refund, increase your investment amount, even just a little. Your future self will thank you. 5. Mistakes beginner investors should avoid. Let me save you some pain. Here are the mistakes that slow people down. Trying to time the market. You won't win. Even pros can't. Chasing hot stocks or trends. If all your friends are talking about it, you're late. Checking your portfolio every day. This leads to panic selling or FOMO buying. Investing money you can't afford to leave alone. Using rent money to invest is how people end up selling at a loss. Thinking small amounts don't matter. They do. The habit matters more than the amount. 6. The moment my first $100 happened. The funny thing is, I didn't even notice when I crossed 100K. Why? Because it didn't come from one winning stock or one lucky moment. It came from the habit. When I finally checked my account and saw 6 figures, it didn't feel like a jackpot. It felt like the natural result of years of small, boring, consistent investing. And that's the lesson. Wealth isn't built in huge leaps. It's built in habits. If you want to start building wealth, don't wait for the right time. If you found this helpful, hit the like and subscribe button. Thanks for watching.